I'm very excited about finally some scrutiny on private investments from the SEC. The SEC has an investment advisory committee that was formed about 15 years ago that provides guidance to the regulator, the SEC. Now, recently, the committee approved a set of recommendations on how to deal with private market and protect, I love this, less sophisticated investors. The recommendation will cover the key problems with private investments for investors, which include how they come up with those valuations. Do you realize they come up with it themselves? There's no outside forces. They say, well, this is what we think it's worth based on this. Now, how unbiased is that? Not at all. That's terrible. And how complex. That's the other thing, too, that these are very complex, and they're not a liquid investment. I'm so glad that the SEC is looking at more of the sophistication of investors. And we have some great investors, but, they're doctors, they're attorneys, they're engineers, but they don't know a lot about investing because it's very complex, and it's just something they don't have the time to go into.
Well, I just think a lot of people, as you said, they're smart, but either they trust their advisor or they believe a salesperson. They get sucked into something. And, one client is a doctor. He came over 5 years ago now, and he had several alternative investments. And I told him, he's like, oh, I want you to manage the money. He said, I can't. We were able to manage a good chunk of it, but these alternative investments, I said, we can't do anything with these. These are really up to that company as to when they want to allow us to redeem them.
They're illiquid.
Yeah. We had one that, we got this notice and it said, hey, we're expecting to be liquidated by 9/30/2025, so a few days ago. I'm like, wow, that's great. Get an email on 10/1. So sorry, one of the real estate pieces did not sell according to plan. So we are now looking for alternative financing or ways to raise capital to make sure we can get your investment back. There's no timeline on when we'll get it. They said hopefully soon. Soon could be a year, it could be 6 months. And it just is something that I don't understand why people do these things. And he was getting a fixed interest rate of 7%, 7.5% actually.
Right.
For me, taxable. Number two, why would I lock my money away for 7.5%? I'll take volatility all day long and get maybe 8 to 10% rather than locking my money away for 7.5%. It just makes no sense. So, I got to say, I think looking at this in so much closer detail is so important. And I do believe it was a wise move that the panel here, the advisory committee, recommended the SEC demand better disclosures, because that is something that most people don't understand, these pitfalls, the downsides to them. So the better disclosures hopefully help. And also, they said who can and cannot invest in private markets. And this was not just putting across the board. If you have a net worth of X amount, then you can invest in private investments. Instead, the recommendation was based on the investor's level of investment sophistication. So again, you got to understand what you're getting into before you sign on the dotted line into these things.
And I don't know how they'll come up with that level of sophistication, but it's something very important, because there's many people that have millions of dollars, but they made it through something else, not through the investment world, and they can lose a lot of money because they don't understand private investments. And again, we say stay away from private real estate, private equity, private loans. All these, they're just terrible. And the SEC, this is an advisory committee, so I hope they do come up with the rules quickly before people find themselves in private investments that they just can't get out of and perhaps lose all their money. Today would not be soon enough for me to see that legislation passed. My recommendation is, if you're not in any type of private investments, don't go into them. Stay away, no matter how good your broker make it sound. And some are great salespeople. Remember, he or she is liking getting paid a big fat commission to put your money into these high risk investments. Say big fat commission. Sometimes it's not all at once. Sometimes it's a little bit up front, and then they get paid fees on top of that. The fees, and we've talked about this before about private investments, how high the fees are. I think they were like 2.5% to 3% per year.
Like the internal fees from the private equity firms, those are high. And, the payouts to the advisors, sometimes that's really unclear how they're getting paid. But again, they're not doing it many times, I think, for the benefit of the client. I think they're obviously get some kickback from it. And if they don't, I was thinking one other thing is you get, again, these false valuations. You almost get a bump up, right? In the valuation of that particular investment every year, it's like, wow, I get to charge a fee off this thing that's growing at a guaranteed 8% until you go try to sell it. You can't. Number two, or you sell it on the secondary market, it's worth nothing. So, I mean, short term, I think it's a very, again, short-sighted concept for advisors when they sell these.
These private investments have not been tested during a slowdown in the economy, and that's what worries me. If that happens, I think you're going to see a lot of storms, a lot of problems,
issues.
People. Yeah. So
yeah, and I think that the thing that I look at too with these private investments is there's just so many concerns. And don't get me wrong, there's going to be some that work out fine.
Right.
There will be some that are good.
Some that will not. I think maybe a third.
Yeah, because I've heard, I did really well. And I was like, good, I'm happy for it. I've heard way more horror stories than good stories, and the risks are just so much heavier than I think the potential benefit.